some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down.
Hello everyone, and welcome to the MT Valencia YouTube channel, and I'll be giving an update to the portfolio challenge, the 25,000 to 50,000 portfolio challenge, and this is the January update. We started the year off with $25,555, and at the end of the month here of January, we're at $30,689.78. And this is a return for the year or for the month of 16.01%. And compared to the S&P 500, it returned 6.44%. So we were able to outperform the S&P 500 for January. And we'll look at the chart I have of the comparison of the portfolio compared to if it was invested in the S&P 500. We can take a look at that in a minute. But going into the activity for January, we first look at the deposits. We had a total of $1,042 come into the account in January. And the 16% return doesn't take into account the 1,000 deposits. So the first deposit came in January 6th. It was $505. And next we had an insignificant deposit of $16, so I don't even consider that. And January 20th we had a deposit of $521 into the account. So this totals $1,042. Now let's take a look at the trades that we did in the account. And all the activity in the account, if you go to the Patreon page, you get up-to-date access of any activity in the account. So as these trades occur or as any deposits come into the account, that is reflected in the Patreon. So you find out pretty much immediately as this activity occurs. So if you want to find out as it happens and not wait till the end of the month, visit at the Patreon. That is $10 a month, and you can get up-to-date access there. So the first trade in the account occurred on January 4th, and we bought 6 shares of Amazon at $83.95. We'll go look at the chart for Amazon. And we bought right here, pretty much at the relative low for the last 4 months. I think we're looking at 3 months here. But we got it at $83.95, and it's currently at $103.13. And so let's go back to, we'll just go through all the trades and then we'll go look at each individual chart. And then next we sold EDU. We exited that position. We sold the entire stake for $40.07, and that brought in $841. And then we turned around and bought AMD. Did a net, it was 12 shares net. And you can see we bought 21 but sold back out 9 immediately after. Only meant to do 12 shares but put in 21. And that was a new position. And then we bought on January 17th 6 shares of PayPal. We added to a position at $80.42. And then on January 23rd we sold out of our VIPs. We closed out that position at $15.25. Brought in $777, and we turn around and put that into PayPal, continuing to add to the position. And then today we also bought another 6 shares of PayPal at $80.16. And let's go look at the positions we closed out. What we're trying to do in the portfolio is get rid of the stocks exposed to the Chinese market. So EDU, VIPs, and ultimately Baidu. That'll be, I think, the last position with Chinese exposure. So we sold EDU at $40.07. And I wanted to do it before earnings because I wasn't quite exactly sure how it was going to react to earnings. It already had a run up from $17 up to 40 in just a span of less than 2 months. So from here to here, 79 days. So a little over, just under 3 months here, we went from $17 to over 40. And with earnings coming up, in my mind, the likelihood of another large move after earnings was minimal. So I went ahead and took it off the table right before earnings. And it's trading near and around where I sold it at currently. It's at 42, but not going to look to get back in this position. We're through with it. Next position we sold out of was VIPS, and sold out of it at 15.25. This is after it had made a run from $6.36. So it had over doubled in essentially the same amount of time, about around 3 months' time. So went ahead and closed the position out in VIPS, and we bought PayPal with the proceeds from VIPS and sold this at 15.25, and it's currently at 15.47. So haven't necessarily missed out on any large move in VIPS. And if we look at the positions in the portfolio, I ordered what we have here in the from highest return so far for the year. This is year to date, so essentially last 30 days. The best performing stock, and 55% skills has returned so far this year, and we're down pretty big on skills. If we look, we're down 82%, and these positions here that are down large, over 50+%, were positions I was following Cathie Wood. Back in 2021, ARK Invest was pretty much the rage, and everyone was hopping on the bandwagon, myself included, and got burnt with the positions with following Aunt Cathie here. So with PaySafe, that is an ARK Invest position that I was following. TuSimple, Path Skills, and Berkeley Lights. All these are positions from following Cathie, and you can see how well they're doing. But I'm not necessarily just going to close them out here. I'm going to see what I can get back out of them. If they can get anywhere close to what I paid for it, then we'll exit the position there. And that was the same thing with VIPS that we closed out on, and ED. Well, maybe not EDU, but I think VIPS was also a ARK position. And so if we can claw back some of these gains. Berkeley Lights, it wouldn't surprise me if that one went bankrupt. So that one might be a lost cause, but we're definitely not adding any more to these positions at this point anymore. So we're just let these ride out. If it takes 3 or 4 years for these to get back to somewhat close to where we bought in at, we'll go ahead and exit the position like we did with VIPS and EDU, minimize the impact to the portfolio. But right now they're down heavily. And so to see these at the top of the list of the return so far for January doesn't surprise me. It also doesn't mean much when you get a 55% return on a stock that was only worth $100 at the time. So going from 100 to 150 doesn't mean much. So it doesn't really have much of an impact on the portfolio. So a lot of the ones, these ARK Invest positions, they really don't have much of an impact when you see these 40-50% returns. But it'll take time to get back in. However long it takes is how long it takes. And PaySafe return 50% so far for the year. And then these other positions we're looking at here, these are all finally realized that I'm better off just using my own ideas instead of trying to piggyback Cathie Woods or anything like that. I figure I can do just as well with my own ideas. So Zillow, we're at 38% for the year, or what is returned for the year. And then you can see here, Carnival has done fairly well. Robinhood starting to come back, and Weight Watchers. It's like it's getting ready to make a move here. If it can break it, it's breaking above these recent pivot highs. So once it gets over that $5 is going to be a big psychological number. We'll have to deal with the 200. Probably see some resistance here at the 200, but as long as it stays above these moving averages, we should be fine. And then the next position we put on, this is a new position, Amazon, we talked about that, I think. And then path, it's right here, we see it, it's at the 200 period moving average, so wouldn't be surprised to see some resistance. The first hit of this moving average in a long time, so we should see some resistance. And Nano Dimension, same thing there, resistance. Ford's kind of been chopping around our purchase price here, and we're in the green. But I'd like to see this continue. You can see where we rejected off the 200 period moving average, made a new low, double bottom here. Now we're retesting the 200. Tested off of it here. Now we're back above it. Today we closed above it, so it wouldn't surprise me to see this. As long as nothing out of the ordinary happens with earnings here, this could be a catalyst for a large push past this 200 period moving average. But if this 200 is going to fail, what's going to happen on earnings? What most likely you'll see if it does fail is a gap down back below these moving averages and a continued move lower. Obviously, that's not what we want to see. So maybe earnings will be the catalyst for a strong push back up to the $16 level. We have Baidu here. We can get this back up 180, 190. We'll look to exit that one. That's a Chinese play. So trying to get out of the exposure to the Chinese market. AMD is a new position we put on in January. Bought here at 68.37 net, where we have 12 shares. So we're in the green on that. Looking to make a run to the 200, see how we react to it, and then maybe we can make a move higher. And PayPal is a position we've been accumulating here, as you can see, over the past 5 months. We got an average price around 78.80, I believe, but it's still close to our purchase price. So if it stays around here or even goes lower, we'll continue to accumulate. I think we have about $3,200 in it, cost basis, and 40 something shares. Have to check, but as long as it stays around this level, I'll continue to accumulate. Once it starts making a run up, then I'll look to start buying something else. In our large position in global, you can see this trend line, this channel. It's holding. We talked about it at the end of the year, how we had a little bounce up here off the double bottom, and it made it past the 50, and now we're looking at making a run to the 200. Got good resistance here at the 124 level. With this was the sell off at earnings. So we'll probably have pretty good resistance here, and it looks like it could coincide with the upper trend line. So if we get the upper trend line and price meeting around this 124 level, that's going to be pretty good resistance. And that's right around where our cost basis is, I think around 127. So we'll probably get a pullback off this level here, seeing how it runs into it. And Chegg was down so far in January. Was doing pretty good on it. It was up, 20% or so, and now it's come back down. We have earnings coming up, so I'd like to see it gap back above these moving averages, and then Berkeley Lights there, which I talked about a minute ago. Now, if we look at how the comparison between the portfolio and the S&P 500 did. we start off January 1st, what we ended the year with, if we put 25,000, this is how the account actually performed. And this is how it would have performed if we had invested in the SPY. And here's all the closing prices each day for the SPY and how it affects the value. And the difference between what the value would have been in SPY versus what we have. So just for example, after the first trading day, we had a value in the account. The portfolio is worth 25,860. If it was in the SPY, it would have been down. It would have been 25,447. So this is a net difference of $413 that the portfolio outperformed the S&P 500. So for the month, the best outperformance we had was on January 23rd, where we had a surplus compared to the SPY of 2,655. And here we are at the end of January, and our difference is $2,447.20. So this is essentially the alpha that's generated over the SPY, and keeping track each month of the alpha that's been generated. So, and looking at the risk assessment measures we have here in the box, the portfolio was up 13 days, down 7 compared to the SPY's up 12, down 8. The average up day here was 1.84%, with the SPY's up days averaging 0.97%, and the down days averaging down 1.27 versus the SPY down 0.68. And this gives an average return on the account that we have here of 0.75, where the SPY's returned 0.31. And for the month, or for the year so far, we've returned 16%, and SPY's returned 6.44%. And here, if you look at the annual standard deviation extrapolated, what we have here, we're at 28% standard deviation, whereas the S&P is at 16.49. And in the Sharpe ratio here, I didn't put in a risk-free rate of like a 10-year treasury or a 3-month treasury. So this Sharpe ratio was just pretty much the year-to-date over the standard deviation. So with no risk-free taken out of it. That's why these are positive. And if we look at the chart of, so we start out 2023 with the same number, and you can see how the portfolio, the account, does compared to if the money was put into SPY. So we have that here. Take a quick look at that. And go back. So in here we have all of our positions. So far, the position that's returned the most from our cost basis is Zillow at 22.6%, and Amazon's right behind it, 22.13%. I think we only have about $500 in Amazon. It pretty much started moving. Let's see where we at. It pretty much started going up as soon as we bought in. I kind of would have liked to have been very happy accumulating more Amazon, but was only able to really put in one deposit in here of about $500. If it would have went sideways at around this $83 or even down, I would have been continued buying it. But since it went up, I just elected to continue putting the money in the PayPal. See, it's only up about 3%. And so since it hasn't made the move up yet, and Amazon did, I just started, or I just continued accumulating more PayPal. And then eventually this will start going up, and then we'll start looking at other stocks to be accumulating. Next, after Amazon, we have Carnival is up just under 15%, and AMD is up 11%. Same thing with AMD. If this comes back in and gets closer to our purchase price, we'll continue accumulating more of that. Then the Carvana option we have on is pretty much break even. It looks like if it's finally broke up over that 50 period moving average. So maybe we can get a run here to the 200. So if you look back in my last video at the end of the year, I mentioned was going to come into this 50 period and we have to see how we reacted to it. And we came right into it and we moved sideways here for 11 days, so just under 2 weeks here. We moved sideways. So 20 is going to be pretty much my target. If it gets to 20, I'll be looking to exit. I think it could make a run to the 200, but it might not necessarily go straight up to it. But so if we get anywhere close to 20, and you see we broke above these moving averages, we got pretty good volume. So this looks like it's going to make a run. And at $20, that's a $550 profit. So, but that's if it got there today. So each day that goes by, this theta is the value that for each day it would go down $5 essentially each day that goes by. That's at $20, but at current price it would be $2.87. So every day that goes by, $2.80 is knocked off the option premium at current price. And I'm not going to get into the Greeks, but that's a little bit of that. And after Carvana, we got Ford, which is pretty much flat, and then PayPal flat. And we have Global, which is our large position. It's down 11%. Yeah, here we go. Our average cost is $127.68. So, and that's right up above that October earnings pivot and the upper trend line I was talking about on the charts. And then Chegg was up. Now it's down. And then you got pretty much the rest of these positions I mentioned earlier. And so that's where the portfolio stands. We're at $30,689.78 here on January 31st, 2023. Looking to push this portfolio to $50,000. And sooner we can do that, the better. Up 16% for the month. Hopefully we can keep this trend going. That's pretty good. Outperformed the S&P 500 by over 10%. Got back almost $2,500 compared to SPY, and up over $4,000 on the month, not counting the $1,000 deposit. So that's where we stand, and hope to see you on Patreon. You can get up to date of any activity there. So check out the Patreon page. It's $10 a month, and we will see you next month here.